So, what does it really take to build a healthcare empire in today's market? Well, it looks like North India's Yatharth hospital just gave us the blueprint in their latest earnings call. The story here isn't just about a little bit of growth. No, it's about relentless, super strategic expansion. Let's break down how they're pulling this off, one hospital at a time.
It all kicks off with this pretty bold statement from their leadership. They're calling this a period of industry-leading performance. Now, that can sound like just corporate speak, right? But it's really a statement of intent. So, what's the engine behind this massive growth? Let's unpack the strategy.
All right, here's how we're going to break this all down in 5 clear parts. First up, we'll look at that record-breaking quarter. Then, we'll run a full financial health check. After that, we'll chart their physical expansion, look at the smart moves they're making to de-risk that growth, and finally, we'll peek at the road ahead.
All right, let's dive right into part 1, this record-breaking quarter. And I mean, this wasn't just a good 3 months for the company. No way. They're positioning this as a real turning point in their entire history.
The big takeaway here is pretty simple. Hitting a new revenue peak wasn't some kind of happy accident. It's the direct result of a really powerful two-pronged strategy: expand and optimize. Build bigger and run smarter. It's a great theory, but do the numbers actually back it up? Let's find out. Okay, time for that financial health check. We're going to follow the money here and dig into the core metrics, the stuff that proves this isn't just hype. It's backed by some seriously strong performance.
First up, the headline number. A whopping 28% year-over-year revenue growth. I mean, in today's market, that is a powerful signal of momentum and a really, really healthy top line.
So where did that growth even come from? Well, a huge chunk of it was just pure scale. Think about this. They added 700 new beds in a single quarter by opening 2 major new hospitals. That's just a massive increase in their capacity to treat patients.
Now, you'd think, right, that adding that many beds would totally tank their occupancy rates. But that's not what happened at all. They held strong at 66% occupancy. That tells you the demand for their services is just through the roof. They're basically filling these new hospitals up almost as fast as they can open them.
Okay, and this is where it gets really interesting. Let's look at the breakdown of that growth. Their older, mature hospitals, they grew by a very respectable 19%. But check out the newer hospitals, an absolutely staggering 110% year-over-year growth. This just brilliantly shows how their expansion playbook is firing on all cylinders. Before we go any further, let's just quickly nail down a key term you're going to hear in this industry: ARPOB. It stands for Average Revenue Per Occupied Bed. All it really means is, how much money does a single hospital bed bring in each day? The higher the number, the more profitable that bed is. Simple as that.
And this table right here, this shows you just how smart their strategy is. Look at the brand new Model Town Hospital. It's already pulling in an ARPOB of over 33,000 rupees right out of the gate. That's immediately making more money per bed than their older established Noida facility. Just imagine what's going to happen as these high-value hospitals mature. They're going to supercharge the entire group's profitability.
Which, is the perfect lead into our third section, the empire and expansion. We're moving from the financial spreadsheets to the actual brick and mortar, in this case steel and glass, growth of their hospital network.
And the pace here is just incredible. Take a look at this timeline. In mid-July, boom, a 300-bed hospital opens in Delhi. Then, within the same quarter, a 400-bed facility in Faridabad is up and running. And they're not even done. They're integrating a 250-bed acquisition in Agra next. We are talking about nearly 1,000 new beds hitting the market in just a few months. It's an absolutely astonishing rate of expansion.
And their expansion isn't just local. They're going global, actively building a pipeline for international patients by opening offices in Iraq and Uzbekistan, and even partnering in Cameroon. But the real masterstroke here is the exclusive deal with the huge new Jewar International Airport. This move positions them directly in the path of travelers, creating this massive natural funnel for new patients.
But look, rapid growth is one thing. You can't just get bigger, you also have to get smarter and stronger. And that's what our 4th section is all about. The strategic levers they're pulling that improve both patient care and, you guessed it, the bottom line. This is all about de-risking that growth engine.
For one, they are pouring money into some really cutting-edge tech. We're talking about things like performing Delhi's first-ever robotic hip revision surgery or using AI for faster, more accurate stroke detection. This positions them not just as a large hospital chain, but as a leader in advanced clinical care.
And that's how you attract the top doctors and the high-value procedures.
Okay, now this next point is a huge deal. A real game changer, actually. For the first time in over a decade, the government has revised the rates it pays hospitals for treating government employees under the CGHS scheme. This has been a major topic in the industry for years, and this change provides a significant tailwind for companies like Yatharth.
And this donut chart shows you exactly why that rate revision matters so much. Look at that. Government schemes make up 37% of their business. That's a huge slice of the pie. So an increase in those reimbursement rates, that flows directly to their revenue and profitability. It's a structural change that benefits a huge part of their existing operations.
And finally, they're really shoring up their foundations. An upgraded credit rating, resolving a major tax issue, bringing in top-tier auditors and directors. These are the kinds of moves that build trust with investors and give them the stability and the flexibility they need to fund their ambitious growth plans.
So with all this momentum, what's next? Let's move to our final section and look at the blueprint for Yatharth's future.
Well, this ambition is backed by some serious capital. They've earmarked 1,500 crore rupees for capital expenditure over the next 5 years or so. To put that in perspective, that's around $180 million US. This is the fuel for more acquisitions, more brand new hospitals built from the ground up, and continued expansion across North India.
And so, that brings us to the final crucial question. Yatharth is building bigger, they're getting smarter, and they're attracting serious capital. But empires built at this speed can sometimes have shaky foundations. The real challenge, the key question, is whether they can balance this breakneck expansion with the elite profitability that got them here. It is the ultimate tightrope walk, and you can bet the entire industry will be watching.